Hey guys, welcome back to the channel, and today we will go over the 3 different investment plans that Fundrise offers and see which investment plan is the right for you. Coming up. If you're new to the channel, my name is Trey, and I'm a real estate, stock, and crypto investor. I'm also a swing trader. If you enjoyed the content and found it helpful, please don't forget to click that subscribe and like button. Now let's get started. Fundrise offers 3 different core investment plans. They are supplemental income, balanced investing, and long-term growth investment plans. The main difference between these plans is how you will be getting your returns. So, as I explained in my 2 previous videos, which you can find down in the description below and up here, you get your returns from Fundrise in 2 different ways. One is from dividends and 2 is from appreciation. In short, you get your dividends usually on a daily basis in small amounts, as well as a big chunk on a quarterly basis, and these profits come from things like rental income from the properties that Fundrise owns, as well as interest from the loans that Fundrise gives to real estate developers. On the other hand, appreciation is earned only at the end of the project. At a certain point, a real estate property or a set of properties will be sold for a higher price that they were bought, and that is what appreciation is. Generally, it takes a lot longer for appreciation to accrue and get paid out to an individual investor. So let's go over these 3 core investment plans. So the first one is supplemental income, and as you can see here on the left side, that the majority of your returns will be coming from dividends. A smaller proportion will be coming from appreciation, and as you can see, the total return will be the lowest out of the 3 portfolios. In balanced investing, the dividends and appreciation are about equal, so you will be getting about the same amount in dividends and as appreciation, and total returns over a period of time, somewhere in between the other 2 investment plans. And finally, the long-term growth, which is my favorite. As you can see, the majority of your returns will be paid in appreciation. As you can see, a very small portion of it will be paid out in dividends in a long-term growth portfolio. However, it has the biggest total return out of the 3. So let's look at these charts that we're comparing here. So on these graphs, we have 7-year time frame expected return. As you can see on a supplemental income, if you look at the y-axis of this chart, we barely passed the 2nd line here. However, if you look at the balanced investing, after 7 years, you will be at the 3rd line on the y-axis. Now, my favorite portfolio is a long-term growth portfolio, and this is the portfolio that I recommend everybody to invest in, because when you invest in Fundrise, you gotta think long term. If we look at for the long-term growth portfolio, as I said before, much of your returns will come in terms of appreciation, but it will take longer time frames. As you could see on this chart, that by the 7-year period, we reached at almost the 4th line on the y-axis. So that is pretty much almost double the returns that you will be getting if you were to use a supplemental income portfolio. So the way it works is that if you choose a supplemental income portfolio, you will see higher returns in the beginning of your investment, and then we're likely to stay stable throughout the life on your investment. For the balanced investing portfolio, your returns will start a little bit lower than supplemental income portfolio, but at year 5 or 6, it will start to increase, because you will have higher percentage of projects that give return in terms of appreciation. So it will start to increase at year 5 or 6, and you will see a good amount of returns. Now, for the long-term growth portfolio, you will see very, very little returns in the beginning of the life of your investment. However, at year 6, you will see a high jump in your returns, and that is because it takes a very long time to build up certain real estate projects from the ground up, add value to them, and then sell them. Another thing to know is that you will save a lot more on your tax bill if you choose a long-term growth portfolio. In the supplemental income portfolio, most of your income comes from dividends, and dividends come from rentals and interest on the loan that Fundrise gives to real estate developer. When you get paid in dividends, that is considered regular income, and you will have to pay regular income taxes on your dividends. In a balanced investing, you will pay a little bit less taxes, and in long-term growth portfolio, you will mostly pay capital gains, which for most of us, it's around 15% instead of a good old 25% that you pay on your income. And finally, if we scroll down a little bit more, we could see the typical portfolio allocation. So this is another way of saying, are we going to be investing in rental, or are we going to be investing in value add projects? So you could see for the supplemental income portfolio, the blue here is income focused assets, and income focused assets are assets from which Fundrise gets rentals or interest on the loan. Growth focused assets is obviously those assets, those projects that take a little bit longer to develop, but they give you more appreciation, so they increase the value of these projects. As you could see in the balanced portfolio, it's about a 50-50 in terms of income focused assets and growth focused assets. And in the long-term portfolio, you can see that the growth focused assets are almost 80% of your portfolio, and the income focused assets are only 20% of your portfolio. If you had to choose a plan, and I know these days that people want to see returns right away. They want to see instant gratification. They want to see returns right away. They want to see a lot of money right away. So I know a lot of people will be tempted to choose supplemental income or balanced investing portfolio. However, let me try to convince you to go long-term growth. Think about this. First of all, as you can see on these charts, the total return on a supplemental income portfolio and balanced investing portfolio is much smaller than what you would get from the long-term growth. But remember that you will also save almost 15% on your taxes if you choose long-term growth. Not only are you making double the amount of returns by choosing the long-term growth portfolio, but you're also saving 15% on those returns on your taxes. That really adds up to a lot of money. Now you're free to choose whatever investment plan you would like, but remember that you will make more money long term with a long-term growth portfolio. With the other two, you may get some income, but you'll be paying a lot of taxes on it, and the overall total return will not be as high. Thank you guys for watching. I hope you enjoyed the video. I hope you choose the long-term growth investment plan. And please don't forget to click that like and subscribe button, and check out my other Fundrise videos down in the description below. I hope you enjoy them, and I will see you in the next video.